Hello, fellow traders. 'Tis I, the Rumpled One. Today's topic: trading is simple. Why do they complicate it? Once again, I've been cruising, surfing the different trading forums out there, just checking out what people are doing and saying, seeing how they trade, because every now and then I pick up an idea, I learn something, or I check out their indicators, I learn a few cool techniques, something I hadn't thought of, or maybe they do something a little in a way that's a little bit slicker than what I do, so I adapt and I adopt. But I found this one thread over there on Forex Factory, one of the places I'm banned from. But I can still see their threads and what they post. And they've got this system that they call it Sonic R, and it uses volume. And I think back in 2009, 2010, the better volume indicator came out, and I got a hold of it. There's a couple little bugs in it. I fixed it, and I did some improvements and enhancements. But then I thought, this volume thing, it's just unnecessary. It's complicated. It complicates matters, and it really doesn't give any information. But I'm open-minded, so I'm looking at their system over there that uses volume. They talk about price, at a certain location near a support or resistance point. Then they talk about, you check out the volume to see if there's a lot of activity volume-wise, but there's not much price movement. Then you can decide if they're accumulating, or if the bulls are in control, or if the bears are in control. And then they say it's not any one thing, it's a combination of the price and where it is on the chart and this volume. And they say it's simple, and they really believe it. Yet, if you read their thread, you see people getting admonished for asking the simplest question because they say you haven't done your homework, you got to read. Well, really, I have a one-page document, all you need to know about trading. It's all right there. Why is it they have so many pages and so many things you have to know, and you have to do your homework, otherwise you lose your posting privileges? It's pretty stringent, and above all else, you have to use their templates. Otherwise, you'll lose your posting privileges. They don't want any outside interference. And on the one hand, I can appreciate that. They're trying to teach a method. They really don't need any outside interference. But on the other hand, it's a cult. The way they treat people, if you don't follow their gospel, then out with you. I guess in a free country, that's okay, but it seems like they don't want you to challenge or discuss anything, yet they say they want you to contribute. So it's kind of confusing. Anyway, let's take a look at their system here. And as you can see, it has this, it's very pretty to look at. It's almost like a work of art. I could put a frame around that hanging on the wall. But as far as trading goes, I think they're fooling themselves. You see, they call this moving average channel. That's the dragon. And when the dragon has a certain shape, then that's when you can trade. And these colored bars here correspond with the colored bars down here in their volume display. And you see here we've got a climax, a bear climax. Here we've got a bull climax. And let's see, I think the purple one means we've got a bear run or something like that, and then the blue one we've got a bull. So to me, it just overcomplicates things. Oh yeah, and this purple squiggly here, I believe that's the EMA 89, which that's what they're using for a trend. But is all that really necessary? And also, they want you to look at price on multiple time frames. I think they even use the 4-hour to see here what the dragon's doing. And you can see here there was volume activity, higher volume than normal. And then but I do like the fact that they have horizontal lines. I can buy into that. But then then they want you to drill down here to M5, and then you can go all the way back down here to M1, so you can pinpoint your entries. But I look at this and I have to chuckle to myself, because once again, I think they don't realize that they might be very successful and profitable, but not because of the reasons they think. And once again, this is just my opinion. But let's go to my chart. Plain simple chart with horizontal lines. And we're looking at the same pair, same currency, on the same time frame. And you can see here, I've got a horizontal line at the today's midpoint. And I've got my candle color indicator and my range gauge. And see, this just tells me what the candles colors are on the different time frames, reference points. The range gauge just tells me about what's happened during the day. And so right here I can see that we're 15 pips above the low of the day, the current low, and that could always go lower. And so we've got month is red, the week is red, and the day is red. So to me, the bias says only take short trades. So as you can see here at this time period, we're looking at 164 minutes worth of data. There's really not too much going on. But we can crank it up to, let's just look at it on M5. And you can see there's a little more action, a little more trading action back here. But what happened? Price crossed the sweet spot line, and then it went back up. So right here, we had a couple things going on, because here's the low, right here, the low of the day. So if you took a rat reversal, say, let's see, we had a red bar, green bar, go high at that, and then we had another red bar, green bar, so we go high. Let's see, so right here was the first true rat reversal. Red bar, close, green bar, close, high, go long at the high of the green. As you can see here, that little trade would have netted you over 10 pips in 15 minutes. That's if you wanted to do a green rat reversal. Then it came back down, came near the low, and guess what? We had the same thing happen. Red candle close, green candle close, go long at the green, and once again, you could have netted either here or here about another 10 pips in a couple of hours. That's 20 pips. And then, like you said, there's not much happening here. But my point is that just by having some simple horizontal lines and looking at the chart and seeing, hey, it's crossing the line, it's going up, I'll take the trade. Because we know chances are by the end of the day, this number is going to be greater than 20, especially for the British pound. But back here, no, we've got to analyze these candles and look at this. Now we got to switch time frames. No, you don't have to do all that. You see this D1 low, 168,523? I can go up to the 4-hour chart, and guess what? The D0, D1 low for today is still 168,523. It doesn't change. You see these horizontal lines? Doesn't matter. We can look at the 15-minute chart, and it's still the same. But if you come over here, and we switch over to M15, the dragon's different. And if we switch to the hour, it's a lot more different. But here, if we switch to the hour, guess what? Horizontal lines don't move. So, once again, I don't see the necessity or the advantage of doing all of this analyzation of something so simple as price when we know price is either going to go up or it's going to go down. And that's all it can do. Price does not move sideways because that would be no movement. So it can only move up or down. But I'll leave it up to you, fellow traders. Do you want to trade something that's a work of art, but you've got to spend, they say, months or years doing your homework before you are even considered one of the flock, and that your opinion can even count for anything? Or would you rather have something that's simple, consisting of horizontal lines? You use your eyes, some common trading sense, proper risk management, proper stop placement, taking profits when they appear. Because to me this is simple. I can explain this. Now, some of you have written and posted that you don't understand things, or you're not getting something. Well, hey, just ask. Let me know what I can do to make these videos better. I'm here, listening. And I appreciate your comments. I appreciate you watching them and posting them and sharing them with fellow traders around the world, because I really want to put an end to this kind of nonsense. Because it's unnecessary, it's complicated, it's complex, it's esoteric, and I just don't see why anybody needs to do that. And one little thing here, just to show you, I have this indicator I wrote that tells you how many bars of data and how much that is in time. And it asks the question, is that enough data? Because if you switch this down here to M1, you're looking at 164 bars. You're looking at 2 hours, 48 minutes worth of data. Is that really enough? Is that really enough data to make your trading decision on? Anyway, fellow traders, I leave it up to you. But as always, it's not what you trade, it's how you trade it. TheRumpledOne, out.